people who own businesses, they sometimes don't want to own them anymore.
Right. There are a lot of reasons to really, move on. Maybe you're interested in doing something else in your life, like retirement or starting a different business. And maybe it's just time to, you've built it up to the point where you're going to reach the maximum value, and it's time to harvest that value by transferring it to somebody else. Some people just get random offers for their businesses.
That's the good ones.
Yes, those are usually the best.
Yeah. So how does somebody then, talk about this kind of concept of an exit strategy in owning a business? Because I think, as I said in the monologue, a lot of people go into business or they go into these types of endeavors, not necessarily with the mind on how to get out of it. It's with the mind on how to build it up to the best it can be. How do you start to cultivate an exit strategy when most people are still in a growth strategy?
Right. I think it's important to just kind of dial back a little bit, and that is there's a recent study that says that fewer than 9% of all businesses have an exit strategy, and when you drop below the $1 million in sales, that just plummets. And so how do you get in that mindset? Well, you've got to just start planning, and we're going to transfer about $10 million in wealth over the next 20 to 30 years, and from this study, most of it is tied up in small businesses. Statistics show and prove out that only 1 in about 4 businesses actually sell. Why is that? Well, it could be just bad planning. Somebody didn't think about it. I've known of people who've gotten a terminal illness, or maybe they became disabled or something. So I think just advanced planning helps kind of sort through the problems, prepares you for the idea that someday I'm not going to own this business. It's time to move on and do something else in my life.
Now, isn't this 1 out of 4, 1 out of 5 number a little skewed? Because so many small businesses are like a one-man shop, and once that one man is no longer going to work there, or woman or whatever, then at that point in time, the business doesn't really exist.
Yeah, I think you'd be surprised. There's actually quite a bit more businesses that don't sell for other reasons than you'd expect. For example, yes, maybe it's considered a one-person business. For example, a medical practice, but that medical practice might employ a medical coder or biller, a front office receptionist, and maybe a part-time medical assistant. So, yeah, we might think of it as a one-person medical practice, but in fact, there are 3 to 4 part-time employees as well. And there are
and the book of business, I suppose, has value.
That's right, and I would think the jobs have value, but at the end of the day, most of that value is tied up in the revenue and the customers and the value it brings to the community. So there are businesses that end up not selling for a whole bunch of reasons. One is capital, so they do fail. Number 2 is just lack of planning. So somebody gets sick. I've known of people who got sick and magically and fortunately were able to sell, but there are a number of others who weren't able to do so. But there are all kinds of reasons. And so, again, planning bears out. It helps, plan for the inevitable.
So what are some of these strategies for people who maybe own a business that want to sell it successfully, whether it's short-term or long-term? Because it sounds like a lot of this has to do with planning.
Yes, there is a lot of planning that goes into it. And I would say first and foremost, and it also has a lot of weight in terms of how successful you are in business, but just having the right attitude and mindset. Too many people when they're in the mode of I'm just going to, over the next 2 to 3 years, wind it down and hopefully sell it, they stop investing in equipment and people, and they just think, well, it's time to just kind of wind down. However, that said, having the right attitude really would say, hey, I'm going to give this my all. I'm going to do my very best. I'm going to build the value here over the next short term. And then recognizing that this is a difficult proposition. You're going to go out and you're going to find a buyer. You're going to get financing. And you need to really have kind of this positive outlook to say, I'm going to get it done. So it's this get it done attitude that it takes over the 2 to 3 year period that you want to have ahead of you in terms of planning. Which leads kind of into, as you alluded, the second point, which is really planning, good planning. Ideally, you want about a 3-year time frame ahead of time. In that time frame, there are some good accounting and tax things you can implement. You want to sit down with a CPA or a business broker, or maybe a transition consultant of some sort. But identify ways to maximize the value of the business in those few, years that you have left.
I imagine those 3 years are going to have a lot more bookkeeping work than maybe the previous 10 or whatnot.
It's going to have a lot of work, not just bookkeeping, but business processes, sales. There's just going to be a lot of work in those final 3 years. And you're right; those 3 years could look like 10 in dog years.
Mm-hmm. Right. I mean, well, I kind of imagine, because as the owner of a business, especially a small business, most of the, I guess, capital, a lot of the capital is in somebody's head. Mm-hmm. And they know how the business works and operates, and maybe it hasn't been ever written down or things of that nature.
Right. I often tell people, really, today, in today's information technology world, the value of a business hinges on things like customer base, technology and know-how, business processes, and these intangible sorts of things. At the end of the day, the revenue and net income flowing into the business, but it's kind of a mix of things that doesn't include hard assets like your building, if you own a building as a business, and your equipment. And so getting it out of your head is a pretty important thing. One of the things we like business owners to do actually sooner in the final 3 years, but is really to implement and put down the business processes in those final years, to get them embedded in the business so it's out of the owner's head, it's into the employees. And there's really a lot of good tools today out there for doing that. There's some great workflow process software. Even our local, software company, Microsoft's built Dynamics and Dynamics CRM. There's some great resources for implementing some process work in those final years. And that just adds and enhances to the value of the ultimate owner, because they're looking at it and they're saying, hey, this business runs by itself because the systems and tools and the people operate the business rather than the owner.
Mm-hmm. And I guess then at that point in time, somebody who comes in to buy that business, right, I mean, can add substantial value maybe because of what they know in business, or what their other assets, but ultimately they're not reinventing the wheel within the business that's being purchased.
Absolutely. They're buying it for something that maybe they don't have. It could be customers, it could be know-how, it could be technology. There are a lot of things. I'm reminded Amazon bought Zappos, and there were some things that Zappos didn't have. But imagine, here's Amazon. Perception is they know everything, right? They're a big company. But apparently Zappos had something that they wanted, so they paid $1 billion for it. I'd love to own a company like that. But
yeah, as would I. Mm-hmm. John Miller joins us. John, you talked a little bit about employees, right? And I know with Zappos, one of their big things is customer service, and that really did boil down to each employee, really having customer service at the forefront of their mind with everything they did. Is that become something where you end up having to maybe make have some employee turnover in order to maybe, put the business on the best pedestal?
Yes, this is another crucial step that has to be made. And now is really a good time to upgrade your employee group. There are a lot of very talented people out on the street looking for work still, in this pseudo recession. But
don't tell Amazon.
Yeah, don't tell Amazon.
There's a recession.
But there are some great people still looking for work. And if you look out among your employees, I guarantee you there's usually one or two that aren't performing to the level that you would like, or they're out of culture, or something's just not where you want it to be. Maybe you want to enhance the value of your business, so you need to bring some new talent in. They have some know-how or some skills that you need. But I would say it's time to really go through your employees, rate them 1 to 10, decide who you want to keep, and see if there's some gaps. We talk sometimes about a missing person report. Is there a missing person to your business, somebody that has some skill sets and things that you need? Well, it's time to go out and make some changes to your business, particularly your workforce. And
I suppose that then if you have certain employees that are, for lack of a better term, swapped out, now all of a sudden you can, in this 3-year planning period, start to maybe see in better processes, more or maybe more revenue or more profit, because technically they should be revenue generating in some ways.
Well, and there's nothing like replacing an employee or letting an employee go to improve employee morale and motivation. People seem to get a lot more motivated when there's been a change.
The carrot versus the stick.
That's right. And I'm not talking about beating people over the stick, but sometimes people come out of, say, a lackadaisical or a lazy mode, or maybe a modus operandi, and they say, boy, I got to step it up a little bit because the company's making some changes and they're pulling out some people that aren't working well, and we're going to have to make some improvements here. So yes, it has a very positive effect.
Yeah, I mean, we just have about a minute left, but I mean, I think you're talking about, and there's an element of being comfortable, and people get comfortable in what their job and their processes are, and then and then there's always this, people always become more efficient, and so I guess.
Well, one of the things we talk about, particularly in these last 3 years, but even throughout the life cycle of your business, is focus on the 3 to 4 key performance indicators, KPIs as we'd refer to them in business. And these are things that you've just got to look at every day. And I would say one of those is probably your sales or your cash flow, one or the other. But there are 3 or 4 things that drive your business more than anything else. When you focus on those, then you're focused on that 20% that delivers the 80% of the results. And as you push that down to your managers and your staff, you really achieve the element of improvement that you're looking for, because you're taking away the distractions and focusing upon those things that just make the difference.
Well, and hopefully you make some of these items more tangible for people where sometimes they're not.